Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, China's facing a major energy crisis that could have worldwide implications, just as it tries to deal with its Evergrande property crisis. But first, in the US, American durable goods orders rose more than expected in August, up 10% above the July level and up 25% above the pandemically affected August 2020 level. A more relevant comparator is the August 2019 level, and they're up 5.3% higher than that. So overall, a very positive result. Further, new orders for capital goods were similarly impressive, and also a new record high. Boardrooms seem to be investing heavily again. But with both sets of data, you can't help but wonder what the impact of higher prices has been on these results. Meanwhile, the latest update of the US federal budget deficit shows a narrowing of their large deficits, down 7% lower than last year, and down to 12.5% of US GDP from 16.1% in 2020. By the way, there's still no resolution to the US debt limit crisis. Taiwanese industrial production is still rising at a fast clip, but their retail sales shrank again in August, but not as much as they did in July. As the Northern Hemisphere heads into its winter season, and with coal burning unfashionable these days, the pressure is on natural gas prices and supplies. In fact, prices are already up 125% since the beginning of June, and the sky seems to be the limit. Russia will be the main beneficiary in Europe. Australia will also be a huge beneficiary. And China will also be paying the price of their relative energy deficiencies and inefficiencies. In fact, the Chinese electricity crisis may turn out to be more important than the Evergrande crisis. High demand and soaring energy prices have forced some Chinese factories to shut down, adding further problems to the already snarled global supply chains. And commodity prices are starting to show the impact of a sudden drying up of demand from Chinese buyers as their plants shut down. We have previously noted that skyrocketing US margin debt levels issued by brokers to their customers at the end of June was up to $600 billion. Well, it's grown sharply since then and is now up to $910 billion, an unprecedented growth of 50% in just 8 weeks. The US Treasury 10-year yield opens today at just on 1.48% and up 3 basis points from this time yesterday. At one point it hit 1.5%. And the price of gold will start today marginally firmer again, up $2 or $1,750 an ounce. And oil prices have moved higher again by $1 and now just on $75 a barrel, while the international Brent price is even higher, just under $79 a barrel. And the Kiwi dollar opens today at 70.2 US cents, and little change since this time yesterday. Against the Australian dollar was soft at 96.3 Australian cents, and against the euro we're just under 60 euro cents. That means our trade-weighted index start today at 73.6, and like yesterday, still well below the top of the 72 to 74 range of the past 11 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.